Hello and welcome to today's video where we're going to be talking about the complete basics of trading charts. If you're new to trading, being able to read and understand trading charts is essential. And in this video today, we're going to be covering the fundamental aspects of trading charts. I'm going to be introducing you to some commonly used types of trading charts, as well as the features that can be used to analyze those charts for trading. And if you're new to my channel, welcome. My name is Emily and on Mindfully Trading, I share both my journey as I grow and develop as a Forex trader, as well as educational material and resources relating to trading. I have been trading for about 5 years now, and I am currently day trading pound against the dollar, so I focus purely on day trading the Forex market. I trade this in both my personal live account and also with a prop firm, the 5%ers. If you don't know what a prop firm is, this is basically where you trade with a company and you take a split of profits that are made on the account. So I've actually been working with the 5%ers for some time now, but recently I've undergone their high stakes challenge, and this is where I am trading their account size of $100,000. I have to respect the rules, so there is a 10% max drawdown on the account. I can't hit that, otherwise I blow up the account. But if I can manage my risk effectively and respect the rules as I have done so far, any profits that are made on the account, we take a split of. So it's 80% to the trader for myself and 20% for the 5%ers. Now this does change as they do scale up as you make more money on the account, and trading with a prop firm in this way is a great option if you are a trader who struggles with lack of capital. This might be a little bit more advanced for you if you are right at the beginning of your trading journey, if you're just learning the basics. But it is great for you to see that if you do struggle with lack of capital, if you don't have a lot of money to invest in this industry, you don't actually need it, because when you are ready, you can undertake a challenge with a prop firm like the 5%ers. And if you are successful, you could trade a higher capital size as well. So I have got a link in the description below for more information on that if you're interested. Meanwhile, let's dive in and explore trading charts. Starting with the basics, what is a trading chart? Well, a trading chart is a graphical representation of price movements over a specific period of time. Trading charts help traders to visualize and visually see what an asset has done over time. They are used to help analyze market data, identify patterns, and to make informed trading decisions. Now, there are loads of different softwares out there that you can use for trading charts. Many brokers will offer their own as well, but they have both good and bad attached to those. As you can imagine, there are a lot of features available with trading charts. I'm going to just be talking about some of the basic ones that you need in the video today. And for that, I'm going to be using the software TradingView, which is the software that I have been using for my trading charts since I started trading right at the beginning, because it is basically a combination of being cost effective and giving me exactly what I need to trade. The platform is extremely user-friendly, it has everything that I need, and that's why I go with TradingView. TradingView have a range of different packages available, so you don't have to actually buy one. They do have a free option. So if you want to sign up with TradingView for yourself for free so that you can follow along in this video, or so that you can explore their features, I've got a link below in the description where you can do just that. But moving on, what else do trading charts do? Well, they provide different time frames, allowing traders to view price over different periods of time. Now, this can be really important because it allows you to really dive in deep into different forms of analysis, and it also applies for different types of trading or even investing. If you are an investor or a long-term hold trader or a swing trader, you may prefer to use a higher time frame, such as a monthly, a weekly, or a daily time frame. And if you are a day trader like myself, you may prefer what's called intraday time frames. So these include faster time frames such as a 4-hourly time frame, a 1 hour, 30 minutes, 5 minutes, or maybe even a 1 minute time frame. Shorter time frames provide more detail over those intraday price movements, while larger time frames offer a more broader perspective on the longer term trend and market cycles. Now moving on, I'm going to be talking about candlestick charts, because these are one of the most popular types of charts to use for analysis, and this is the type of charts that I have chosen to use as well. Candlestick charts provide a visual representation of the price movement within that current time frame. And within one candlestick, you can gain 4 pieces of information. So let's break that down. Looking at a candlestick here, we can see that there is an open. This is where the price for that specific period of time opened. You can see the upper wick. This is also known as the high. It is the highest point that price moved to within that period of time. Vice versa, you can also see the low. At the bottom, this is the lowest point that price moved to within that period of time. And then finally, there is the close. This is where price closed at the end of that period of time. And all these bits of information are crucial for trading analysis. Combine that with multiple candlesticks and you can see how you can really get into technical analysis. Now, although candlesticks are really popular and I personally have chosen to use candlesticks for my technical analysis, there are other chart types available if you prefer a different method, such as line charts. Now, line charts do have their advantages as well. They may not provide as much information as candlesticks because you don't get the open, the close, the high and the low, but they can help simplify your analysis. So for example, if you look at a line chart, you can more kind of simply visually see the actual movement and structure of price. So it may be easier to identify whether price was moving up or down. Line charts are straightforward and useful, particularly for identifying trends and also support and resistance levels. Even though I use candlesticks pretty much 90% of the time, sometimes I will switch to a line chart to just gain a different perspective on a asset class. Now, moving on through the different features available on trading charts, you may have heard of technical indicators. Now, there is a lot to be said of technical indicators, and I don't want to dive too much in depth on that topic. I have created a separate video which explores price action versus technical indicators, so I will include a link to that above. But to give you an overview, especially if you are a complete beginner, trading charts allow you to incorporate technical indicators, which are mathematical calculations that you can apply to your trading charts to give you another perspective in your analysis. There are some common technical indicators, you may have heard of them, such as moving averages, which are really good to use in a trending market. There are types of indicators called oscillators, such as the RSI, the relative strength index, and also the MACD. Indicators can basically be utilized to give you additional insights. They can help you to determine trends, to analyze momentum, to highlight potential reversal points, and also potential entry and exit points. There are people out there who love technical indicators and will use them with their trading, and there are people that strongly dislike technical indicators and will avoid them like the plague. But they are another resource that you can utilize on your trading charts to help you to make better trading decisions. Moving on, something else that you can do with trading charts is apply support and resistance levels. Support and resistance levels are significant price levels where buying, support, or selling, resistance may occur. These levels are often depicted on trading charts and play a crucial role in analyzing price movements as well as making trading decisions. So one thing that you may find in the trading world is that people like to use lots of different words which pretty much mean a lot of the same thing. Support and resistance levels, I prefer to use the term key levels, but I tend to use mine from the daily time frame because that is a high authority time frame. It is used by so many different people in the trading world, banks, institutions, corporations. But trading charts allow you to visually see where these areas, where these key levels, these support and resistance levels are on the charts. And this can help you to formulate a trade plan. In addition to support and resistance, trading charts also provide the option of drawing tools. There are many different drawing tools available. I love to work with drawing tools, and one of the most commonly known and popular drawing tools that you may have heard of is trendlines. Trendlines are drawn on charts to help visualize the direction of the price movement. An upwards trend line helps to connect a series of higher swing lows, indicating an uptrend, whereas a downward trend line helps to connect a series of lower swing highs, indicating a downtrend. Trend lines can help traders to visualize the movement of price, to be able to analyze potential breakout points, and to also identify entry and exit points. And this also leads on to my next point, which is chart patterns. There are many different chart patterns out there, and again, some people may have different terminologies for the same pattern. You may have heard of some of the more commonly known chart patterns such as triangles, bull flags, bear flags, head and shoulders, double tops, double bottoms, and many more. But these chart patterns can help you to bring different insights into potential market reversals or continuations. These patterns are formed by price movements and can help traders to anticipate future market behavior. And finally, something else that trading charts can provide, something that I use on a daily basis that's crucial for my trading plan, and that is multiple time frame analysis. It's super important to consider multiple timeframes when analyzing charts. So although you can just stick with one time frame, such as the daily, it can really help, especially depending on your strategy, to analyze multiple timeframes. So for example, I start with the weekly at the beginning of the week, I move down to the daily, I then move down to the 4-hourly, and then I move to a faster time frame. And this is called top-down analysis approach. Higher timeframes provide a more broader perspective on trends and market cycles, whereas the faster or the lower timeframes can help provide you with more specific detail and in particular entry and exit points. Combining multiple timeframe analysis can really help to provide a well-rounded analysis approach to trading. So in conclusion, understanding trading charts is a fundamental skill for any trader. By familiarizing yourself with the different chart types, with different technical indicators, different drawing tools, support, resistance, trend lines, candlestick patterns, and different time frames, you will be gaining valuable insights into the market movements and be in a better position to make more informed trading decisions. Remember that practice and experience is the key to mastering the art of chart analysis. I hope you've enjoyed this video. If you have, do let me know by hitting that like button below. Don't forget to subscribe to the channel for more content, and I'll catch you in my next video. Thanks for watching. Bye.